Guess who's back? It's me, you silly goofballs. Hi, it's Trey. Did you guys miss me? Probably not, but guess what? We're back today, and it's going to be an AMC related video, focused video. I know. A lot of you guys wish I would make videos about Amy every single day, but I try to wait until there's actually something to discuss, and there is something to discuss now, from a technical standpoint, from a chart standpoint, from a couple different standpoints, and I'd like to focus particularly on that. So we're going to talk about what it would look like for a continuation of breakout, particular levels that you could see along the way, and what the worst case scenarios would be. So before we get into it, guys, I'm going to Trey's trades where we can talk fast and do some classic. Probably saying I'm going to find you an expert. So please let's get into the video. Today, I had a lot of people ask me, Trey, how did AMC have the move that it did? And there was a couple different answers. You know, some people said it's because hashtag Ken Griffin lied was trending on Twitter. Some people said it was because that one goofball, what was his name, Assman or something? You guys know what I'm talking about, Cliff Assman. He went on mainstream media and said that he's short on AMC about 0.16% of his portfolio or something. Some people hypothesized it's because the GameStop report came out. But the truth of the matter is, it's because I drink water. Nah, but from a real standpoint, the reason why you got this move today is quite simple. You had a technical breakout. Now it's quite simple. In first grade, they teach you how to connect dots, and that's what you do in this situation. You tap it, you tap it, you tap it. You get at least 3 taps, and you draw a line connecting all these different touch points. And you can see that today it officially broke through this falling level of resistance that has spanned all the way back to March of 2022. This is critical, and this is actually a very similar setup to what we got way back before we had this massive run up to $34. And ultimately, you're waiting to see if it is going to replicate this again. So that's what we're going to be talking about today. What is it going to look like to replicate that run up and maybe even get something better than that? Because it did end up falling just short of what I would consider to be the holy grail trend line. Now, if you want to draw these on your own, I already showed you this one. I have another one right here, and this is what I'm waiting for a break on. And then you're connecting these dots. I am on a log chart. Keep that in the back of your mind. You can do this on TradingView by going to the bottom right of your chart, clicking log. You tap, tap, almost tap, almost tap, 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 and then a tap. And a break above this is going to be quite critical. So that's another line. And then the grand finale line is this one. Tap, 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 right? Just this falling trend line right here. Now, there's a couple different scenarios that I've got drawn out, and today, by the way, was a picture-perfect breakout. And the reason I say that, quite simply put, is you had the volume to follow through with it, right? You get this bull out, it's consolidating. Volume increases as it breaks out here. This is beautiful. This is exactly what you want to see. You want to see volume increases off of a technical breakout, which is what we got, right? Going into tomorrow, into the rest of the week, I want to actually see a situation that's very similar to right here, right? So what we got back here is a breakout from this falling trend line. It lasted about a month or so, 10 February to about 22 March, about a month and a weekish. And it broke this trend and moved up to this trend line and then flagged out for a while before breaking above that, right? I think that this is the best case scenario. What happened? Well, if you look at the RSI, which is the relative strength index, it gives you an idea of when things are overbought or oversold. This purple trend line right here, you can get this by going to indicators and turning this on your own TradingView chart, or Webull, or Thinkorswim, whatever you use, right? It tapped out at about 86 and then dropped back down about 50 to then get another massive run up to about $34, right? This consolidation of this bull flagging, this falling resistance, rising support, flag out pattern that you got off of that nice move was the consolidation of the cool off and breathing period that Amy needed to get that nice push to $34, right? I want to actually see a replication of that, and that is what this white trend line represents right here. Now, today, I tweeted out that I believe Amy is going to come up to about 1450, 1460 or so, and that's what this yellow circle represents, and that is the trend line that we need to break. So here is the flag out opportunity, right? It would look something like falling resistance, rising support, continues to bounce back and forth until eventually break into the upside. This would be the best case scenario, right? Is that going to happen? Can't guarantee it. Could, might not. Worst case scenario is this red one. It reject here. And that is possible, right? If you look historically at every time that it's tapped this trend line, the last time that it did, way back in May, it rejected and came back down. And this is when it hit about $16.50 or so. So it could tap this and reject and come back down. That is an option. I mean, you can see it, right? This has happened in the past. So we have to keep that on the table. If that happens, I think that AMC, over the period of a couple of weeks, would return back to this rising trend line to keep respecting this pattern. And that is why I said about 12 bucks or so, right? That'd be the worst case scenario for Amy right now. But there is a beautiful one. The white and the green lines represent a true breakout, in which case you're looking at sort of two big spots, right? I'd be watching for about $16.50. And from there, the real opportunity, the touch point and the tap at the Holy Grail trend line. Now, is this going to happen? I don't know for sure, right? I can't guarantee you anything. I think if the SPY is green, this is going to influence this pretty heavily. If the SPY is red, it's going to be very hard for AMC to get some strength in its sales. It needs a strong market to sort of back the moves. And if you don't believe that, all you have to do is look at the SPY run that we got over the last couple of days, which allowed for this to happen in the first place. But there is also a second piece of this, and that is the AMC historical implied volatility. Now, this is something that I've discussed quite a lot in the past, and it's the idea that AMC's historical implied volatility has been overly juiced for some time. And what I mean by that is it goes through extreme periods of high volatility, and this is how options are priced in on any given day, calls and puts. I didn't realize I was frozen. At this point, I'm in too deep. Whatever. Just keep going. Nonetheless, implied volatility is how options contracts get priced in, right? And they're priced based on two key factors. And one of those factors is volatility, obviously, and the other is what people are willing to pay for both calls and puts. So if you have a lot of people buying calls, historically speaking, call price seems to stay high. If you have more people buying puts, well, put price will tend to stay high. It's all about supply and demand. If people are buying your supply, keep the demand high. People aren't, you lower the prices. And what you'll notice is every time options volume dries up and there's less calls being played, that historical volatility tends to drop. Well, you had a huge period of that. And then today, you finally got sort of a bounce off of what would be an uptrend of that overall historic implied volatility. I'm going to show you what that looks like, right? So if I come over here to my tweets, you'll see that I tweeted this out here today. It looks something like this, right? It's respecting some sort of triangle pattern, tap, tap, tap. From here, I'd expect a decent sized push up. And if it breaks this top trend line of historical implied volatility, which is how options price, it's how expensive calls get, excuse me, I would expect it to match the overall price of the stock. That would be a great overall sign, as this typically moves alongside volatility, right? This is a market maker's way of protecting themselves, so to speak. So why did that happen in the first place? Well, number one, volatility decrease, and number two, there was a better overall balance in call to put premium. What that means is less people were buying calls, and there was an overall better balance. And why that's important is because it wasn't necessarily a great time to buy calls. You see, timing is everything. I've mentioned this before, I'll say it again. Buying calls isn't bad. Buying calls at the wrong time, gambling calls, losing money on calls is bad. If you use the tool incorrectly, it's not a great tool. If you use the tool properly, it's a fantastic tool. You can get some nice moves. Well, this is certainly a time in which the implied volatility would lean towards saying, hey, over the next couple of weeks, you're going to expect that implied volatility will tap up to the top of this trend line that I just pointed out to you before, which is here, right? Tends to do that. It'll tap here, and then it'll come back up and tap again. So I'd expect a decent sized push off this. This does look pretty good. This is a nice pattern. It does look solid. And you did get a technical breakout to match it. And if everything goes square, right, $29-30. If it breaks here at about $14.60 or so, this is what I would watch for over the next coming weeks, right? It's definitely possible. It looks fantastic. This is a great setup. And the only last thing that I would say, right, to keep an eye on is volume, right? Volume is good. Now, how are you going to know if this best case scenario, like the white line or the green line, isn't going to take place, right? You can't have fake outs, for example. If you see it push to the upside, but volume continues to fade down, probably a fake out, right? There's not a lot of strength in that move. Why I said today was a clean breakout is because the volume here was high. You want to see that volume high and following through with the overall move, as that'll indicate that buyers are stepping in to sort of match the move. The algorithms, the institutions, the hedge funds, the market makers, the U's, right? The me's, the everybody's. This is the fucking move. That's how you know, right? So you want to see volume following through on that. Last thing I'll say is if we get this white pattern, what I'd really like to see is a fade in volume followed by the push up. You want to actually see a fade in volume when you're flagging out in a bullish situation, because it shows that there's not enough sellers to push price down. It's essentially buyers, psychologically speaking, waiting for the next move to see if there are going to be sellers stepping in. If there's not, well, there's your opportunity to push things up. So that's what you'd be waiting for. So I actually want to see that. Don't be scared if you see volume decreasing. If we get a consolidation period, that's normal. That's actually a good thing. That does indicate strength in the overall move, and I'd be quite satisfied with that. So those are the different situations that I see. The worst case is this is a rejection. You replicate this move, in which case I think it's going to come down and test $12 over the coming weeks. The best case scenarios is white, flag out pattern, which is very similar to what we saw back here in March, right? Flag out before a huge touch point up to here. And the best case is that it comes back up to this trend line, $28, $29. And I've said this before, I'll say it again. If you break that trend line, that's the holy grail. That's the 1450 of back in May of 2021. That is what will initiate a squeeze. You will get a big move off of a technical breakout like that, and it would look pretty nasty, pretty dirty. This looks very reminiscent of what we saw back in March of 2022 this year. I can't guarantee you anything, right? But the setup is very similar. The implied volatility is nice and low leading into this. The technicals look good. The buying volume is there. The potential's there, right? The only hiccup you're waiting on is this going to be a rejection, or is this going to be the breakout? Because if this is the breakout, well, you're going to see a big move to the upside. And that's what we're waiting on. That's what you're trying to see if it's going to happen or not. And if not, well, I think you're just going to get a little more tightening, right? As it comes back down to this trend line, I think it'll continue to bounce back and forth until it decides it wants to break to the upside. That'd be my bet, right? That's what I've got for this video. So hopefully that was valuable. Yeah. All right. Catch you later. Much love, like Deps. Peace.